Saving up money for a down payment and closing costs on your first home tends to be one of the biggest hurdles on the path to homeownership. If you aren't lucky enough to have a family member willing and able to gift you those funds, you need to look for an alternative, and that's why you're here. I'm going to provide you with details on what I feel are the top 4 down payment programs of 2024, how they work, and what it takes to qualify for each. So first of all, let me explain what a first-time home buyer is. A first-time home buyer is not someone who has never owned a home. A first-time home buyer, when it comes to these programs, is someone who has not owned a principal residence, meaning a property that you lived in year-round, within the last 36 months, so 3 years. That's going to make you a first-time home buyer. Now, the programs that are available to first-time home buyers, where they can utilize the money toward a down payment and/or closing costs, the properties are for people that are buying the home to live in as their principal residence, meaning the home you're going to actually occupy. So let's start with the first program that I see being used most often and is extremely popular right now, and that is a 1% down conventional mortgage. And what that actually is, it's a grant program that will give you 2% of a $200,000 property to use toward your down payment. And if you do the math on that and are utilizing a 3% down first-time homebuyer conventional mortgage, well, if 2% is being covered by the grant, that leaves 1% for you to cover as the buyer. But you might say to yourself, well, I don't even know where I can buy a $200,000 property. And that makes sense because there might not be a $200,000 property available in your market. So what you can also do with this program is you can take that 2% of $200,000, which is $4,000, and you can take that $4,000 and put that toward your down payment and/or closing costs. So essentially, this is a $4,000 grant program for first-time home buyers, right? Not necessarily just a 1% down program as it's advertised by a lot of lenders. Now, with this program, there are income limitations, as there are with most others. Your income cannot be more than 80% of the area median income for where you're buying the home. And you can do a lookup for this. Fannie Mae has one, Freddie Mac has one, and I can share the link in the description, but you can check those out. You can search based on the county, the city, the exact address, whatever it is of where you're looking to buy, and it will show you right on that site what the 80% area median income is. Now, when it comes to this program, the income limits are based on the qualifying income. And I'll explain the difference between qualifying income and household income as I move through some of these programs. But this is based on qualifying income, meaning the income used on the mortgage application to qualify. And I say it that way because your household income, if you're a married couple or you have other people over 18 that live in your household that work and have income, may be higher than the 80% area median income. However, if the income for the person who's going on the mortgage is at or below the 80% area median income for where you're looking to purchase, then you would be eligible. And you also need to meet the minimum credit score requirements for a conventional loan, which is 620. So you need at least a 620 credit score. Income needs to be at 80% or below of the area median income, and you need to be a first-time buyer, which, as I already told you, means you have not owned a primary residence within the last 36 months, 3 years. So that's program number 1. Program number 2 is the Home Ready First Grant. This is a Fannie Mae program that gives you $5,000 toward your down payment and/or closing costs on the purchase of, once again, your primary or principal residence. You need to be a first-time home buyer with this program, just like the other. Now, it gives you $5,000 to use toward your down payment and/or closing costs. It actually gives you another $500 toward your appraisal. So an appraisal is something that the lender orders when you go under contract for a property, and it determines whether or not the amount you're paying for that property in your contract is what the home is actually worth. And it will give you an additional $500 toward a home warranty if you select to have one. Now, with this program, there are no income limits, which is fantastic. You do have to be a first-time buyer. You do have to meet the minimum credit score requirements of 620 for a conventional mortgage. But what's unique about this specific program is that it's actually based on where you currently live. So if you're working with a lender who can offer you this program, they have a lookup tool where they can enter your current home address, and if it's located in an eligible census tract, then the lender will let you know that and tell you that you're qualified for this program. And another cool thing with this specific program is it actually has lower interest rates than what you would get on a regular conventional mortgage. And if you're putting less than 20% down and you have to pay mortgage insurance, and I've talked about that in some of my other videos, so make sure you subscribe to watch those. But if you have to pay mortgage insurance, the cost of that mortgage insurance is actually reduced on that program. Now, The next hot program for 2024 is specific to the state of Florida where I'm located, but there's similar programs in other states. This is the $10,000 Florida bond program. Now, unlike the other two programs, this program will give you 10 grand towards your down payment and or closing costs, but it's not forgiven. The other two programs are grants, meaning you do not have to repay the $4,000 or the $5,000 I talked about. With this program, you would need to pay back the $10,000, but it's not in the form of monthly payments and you don't pay interest on the money. It's actually deferred for 30 years. So if you kept the home and you kept it all 30 years, you would owe the money after 30 years. You'd also have to pay it back if you ever refinance the mortgage, meaning when you refinance your first mortgage to get a lower interest rate or whatever the reason would have been, you'd have to pay this money off as well. But like I said, there's no monthly payments required. You don't pay any interest on that money. Now, the minimum credit score for this particular program is a 640, but you can take advantage of lower interest rates than what you see on your traditional mortgage options because you're getting the same interest rate on this program regardless of your credit score. So if you have a 640 credit score or you have a 780 credit score, you're going to get the same interest rate if you're using this program. And there's a set rate for the first mortgage, and that's what I'm referencing. So it doesn't matter who you speak to, what bank, what lender, what broker. No one's going to offer you a better interest rate than the other on this program because it's set by the state of Florida. So if you're doing the FHA or VA version of this $10,000 bond program, you're going to get one rate. If you're doing a conventional version, you're going to get another rate. But those rates will not vary from lender to lender, bank to bank, broker to broker. So you want to work with the person who's going to educate you and provide you with the most information on these programs and obviously is well versed in it to help get you to the closing table properly. You don't have to worry about shopping your rates as I've recommended you do with other loan programs when it comes to this specific program. Now, there are income limits for this program. They're relatively high, but these are based on the county where the property is located that you're buying, not where you live, the county where you're buying, and the number of people in your household over 18 with income. So remember before I mentioned qualifying income versus household income. Well, this is where it comes into play. The bond program looks at household income for those who are 18 years or older with income. So you may be the only borrower on the loan. However, if you have other people in your household with income that are over 18 years old and their income combined with yours puts you over the limit for the number of people in your household and the county where you're looking to buy, well, then you would not be eligible for this program. You want to keep that in mind. There are income limits based on household income. Now, if you're a veteran, what's nice is you're a military veteran, active duty military, you do not need to be a first-time home buyer for this program. Or if you're buying in a federally designated targeted area, which you can find on those websites, or your lender can check for you, you also do not need to be a first-time home buyer. But no matter what, you're going to be limited based on the purchase price and the county where you're looking to buy and your household income for the county where you're looking to buy. Now, those programs are available today, right? Right now it's March 2024. However, the fourth program that was hot in 2022, even hotter in 2023, and is returning in July of this year is the Florida Hometown Heroes program. Now, you may already be familiar with it, but if you're not, this program will give you 5% of whatever you're borrowing, right? So let's just say your first mortgage is $300,000. They'll give you 5% of that, which would be $15,000, up to $35,000. So if you're giving you 5% of your first mortgage amount, that means your first mortgage, if it were $700,000, they would give you a $35,000 grant, or sorry, not grant, a bond that you can use toward your purchase. Now, just like the $10,000 bond program, you do need to pay this off. It's zero interest and it is deferred for 30 years. You need to pay it off at the end of 30 years, or if you sell the property, refinance the first mortgage, or no longer occupy the property as your primary residence, but 5% of the first mortgage amount. So if you're going to utilize the program and you're going to do a 3.5% down FHA mortgage, you're actually getting an extra 1.5% that can go towards your closing costs. Or if you're doing a conventional 3% down mortgage, you're getting an extra 2% that can go towards your closing costs. So there's a chance, and actually this is available on VA too, as a matter of fact. So no money down VA, they're giving you 5%, should cover all your closing costs. So the point I was going to make is there's a chance you can get into a property with absolutely no money out of pocket utilizing this program, which is why it was so extremely popular and why it ran out of money so quickly. We had $100 million in 2023 with this program. We're expecting another $100 million in July of 2024. It was gone in about 2 months. So just keep that in mind if you're going to use this program versus the other programs have the funds readily available. $10,000 Florida bond, it seems to never run out of money, right? Versus this, which is available for a limited amount of time when they do release those funds. There's no payments required, as I said, on those funds. Just like the Florida bond program, it's a 640 minimum credit score. There are income limits based on the county where the home is located, but those income limits are based on qualifying income, not household income. So once again, this is more like the $4,000 to $5,000 grant programs I mentioned, where it's going strictly off your qualifying income, not the household income like the $10,000 bond program requires, right? With this program, the limits are set by the state for the program itself, and they're higher than those of the other programs. So with this, I think it was in the mid $100,000 range last year when the program came out. I imagine it's gonna be higher because area median incomes increase over time and the cost of homes increase, and therefore the income limits for the program should increase as well. We don't know what those are yet or what they will be, but I imagine they'll be higher than what they were in the past. There are gonna be purchase price limits for the county where you're looking to buy, similar to that with the bond program, but those are relatively high. Here's a caveat to this specific program. The borrower, at least one of the borrowers on the loan for this program, must work for an employer who has a location, a brick and mortar location in the state of Florida, and they must work at least 35 hours or more per week. This is one borrower on the loan needs to meet that requirement. You can actually be self-employed, have a Florida-based business and meet that requirement, but that's extremely important to this program. Now, if you're a veteran, just like the Florida bond program, you do not need to be a first-time home buyer, or if you're buying in a federally designated targeted area, just like the bond program, you do not need to be a first-time home buyer. But also, like the Florida bond program of $10,000, there are set interest rates with this program. So once again, you don't need to shop it around. The FHA and VA rate is going to be the same regardless of who you speak with. The conventional rates will vary slightly, whether you're getting a Fannie Mae backed mortgage or a Freddie Mac backed mortgage. Those rates will be different, but they will not be different from lender to lender. They'll just be different for the program itself. So these are my top 4 down payment programs for 2024, although there are others that exist. So I encourage you to subscribe and watch my video that's specifically about down payment assistance programs and how to find them. I hope the information I've provided has changed your outlook on the possibility of owning a home in the near future, and I ask that you leave a comment below if you have questions about your scenario or past experience with this subject. I reply to 100% of the comments, so make sure you leave one.